Hey everybody, it's Mike from Orderflows, and today I want to talk about the Delta footprint chart. Now, most of you are already familiar with what a footprint chart is when it comes to trading order flow, but there's actually several different types of footprint charts available that you as a trader can use. There's the most common one, which is the bid-ask footprint chart, which is the one that shows the volume traded on the bid and the volume traded on the offer. Now there's also a delta footprint chart, which shows you delta at price. So say at the price of 44.50, when it was bid there, it traded 20 contracts, but when it was offered at 44.50, it traded 5. So that would mean there's a delta difference of 15 on the buy side. So it would show up as minus 15 because there was 20 aggressive sellers versus 5 aggressive buyers. Now there's also a volume footprint chart, which just shows you the total volume at price, both the buy and the sell added together. And there's also a diagonal delta footprint chart. Now, what I'm going to talk about today is the delta footprint chart. So let's get our chart up here real quick. And okay, so this is your normal volume footprint chart, which, sorry, not volume footprint chart, but rather the bid-ask footprint chart. And you could see the volume that's traded on the bid, the volume that's traded on the offer. So you could make your decisions based off what you're seeing in the two-way auction, right? So you can see 8 lots traded against 0, 5 against 0, 2 against 2, 12 against 5, 10 against 7, 3 against 10. Okay, so that's the normal bid-ask footprint chart. And most software, I'm using my software, the Orderflows Trader software, should give you the options, right? If your software doesn't give you the option to make it change, usually, like my software is under the ladder content, so you can see there's delta, there's volume, there's diagonal delta. I'll just show you volume really quick. It's just the volume. When you take the volume that traded on the bid, the volume traded on the offer, it's going to give you that number. So you can see at this price of 1972.30, 1 lot, at 72.20, 8 lots, at 72.10, 7, at 72 even, 7, and so on. It's just the volume, and so I was going to put it on one side. It has to put it on one side of the footprint. It's either going to put it on the left or the right. In my software, I have the candle in the middle, so it's not going to put it right down the middle overlapping. So it's just the volume that trades at price. Now there's also the diagonal delta. So there's the delta and there's that diagonal delta, right? Remember, markets trade in a two-way auction, and if you want to see what the diagonal delta is, you just change it to diagonal delta. Now, I don't advocate switching charts midway through trading. It's a great thing to look at after the market's closed, and if it's something that you want to use going forward, set your charts up that way. So each day you have them, already open, so you don't have to keep flipping through chart books, etc., and open up a new chart, changing it. You just be ready to go. Okay, so diagonal delta is showing what's in the two-way auction, the delta. Now, the delta, the plain delta footprint chart, is what I refer to as the horizontal delta, and that's what I'm going to be talking about today. So let's pull it up here really quick. And okay, so it's telling me at this price of 19, right here in the middle, 1971.70, there was 3 lots more traded on the bid when it was 71.70 bid versus when it was 71.70 offered. Okay, at the price of 71.80, there's no volume in there, so it's telling me, it was equal. It could be 0. It could be 0 traded at both sides. It could be 1. It could be 5. 1 and 1 or 5 and 5. But there's nothing in. No one side is in control. Here you can see 5. Right, when it was 1971.90 bid, there was 5 lots more traded than when it was 1971.90 offered. Right, so you're just taking the horizontal difference in the volume as opposed to the bid offer volume. And where does this come in handy is you're going to be able to see things that normally you probably wouldn't have noticed. And I made a video recently discussing heavier than normal volume, and the same thing applies to delta, right? Because remember, delta is the net difference between aggressive buyers and aggressive sellers in a bar. Okay, so if you have again, above average normal volume trading, but this time now you know, it just sticks out like a sore thumb that it's going to give you potentially better trading opportunities. And gold is a great market. It follows order flow nicely. And it's not a market like the E-mini S&Ps that trades tons and tons of volume. But you know what? I'll talk about yesterday. There was a great example. If you are using order flow, especially if you look at a delta footprint chart, you can sometimes see things that you might otherwise overlook. Okay, so let me just find it. It was yesterday was what day is today? Today's the 12th, so yesterday was the 11th, and you can see here, right? The volumes are, now these are not volumes per se. These are delta volumes. So it's not one lot traded here and one lot traded here, 4 and 8. It's the difference, right? The difference at a price level between what traded on the bid and what traded on the offer. So if you see 1, it doesn't mean it was just one lot traded. It's a difference of one lot traded. Okay, so I know for some people it might be a little bit confusing at first till you sort of wrap your head around it. But once you do that, then it just becomes a lot easier to understand. Okay, so this is yesterday in the gold, right? Remember, there's a lot of interesting talk going on in the gold markets these days with everything going on in Russia. So this market, it was basically trading around, take it anywhere from in here, around the 1867-ish area. Then it starts to sell off. It starts dropping off quite dramatically. You could see the price dropping. But when you're looking at the delta footprint, right, you're starting to see some big volumes on the way down on the offer side. Now, it's not uncommon to see big volumes on the bid side on the way down, because people they're trying to buy the dip, right? That's all everyone talks about. Anyone that's in crypto, it's always buy the dip. Dollar cost averaging down. I was watching, there's this guy talking about Bitcoin recently. I mean, where are we now? We're like around 39, 40,000, just below 40,000. And he's like, I'm just dollar cost averaging. I'm going to be doing this for the rest of my life, basically, he said. And, it was interesting because on a dropping market, that's why it's not uncommon to see big volumes or bigger than normal volumes on the bid side. But when you start seeing them on the offer side as the market is dropping, right, it's telling you sellers are coming in, they got supply, they're putting it out there on the market, it's helping drive the price lower, right? So you see this 92, right? You don't see any size really, here's like a 30, here's a 48, here's a 118. This is on the offer side of an up bar, okay? But when you're seeing it on the offer side of a down bar, realize what's happening. Market's dropping, sellers are coming in, they're dumping it because they think the price is going lower. When you see it on the offer side in green candles on the way up, oftentimes there's just people taking profits, right? That's where you would expect to see it. But when you start seeing it on the offer side as the market's dropping, that's a sign that, hey, you know what? It's time to turn, from the Magnificent Seven, the movie, time to turn mother's picture to the wall and get out. So here's this market, it drops, right, from, the 66 area down into 59.5, and you see a really big size here, 209. Again, this is delta, right? So it's not the actual volume, it's the delta. It's the difference between the volume that was traded on the bid when it was bid there and the volume traded on the offer when it was offered there. So what's happening? Sellers are coming in, they're helping drive the market down. It's not just markets drop because sellers are hitting the bid. Yes, I mean, that's what causes the markets to start moving lower, sellers hitting the bid. But what stops the market from retracing back up is the big offers. So you saw it there, right? The 92. Then you see the next one, 209. Market drops down, does come back up a little bit. But notice as it comes back up through this price area. What are you seeing? What are you seeing here, right? You're seeing the delta mostly on the offer side. So even though the market is bounced up a little bit, you still have people offering it out. Right? People say, well, Mike, aggressive buyers are buying it here, right? Because it's trading on the offer side. Okay, yeah. People are buying it in anticipation that this is the bounce, that this move is over. But what you have is you have supply in the market. People are offering it out. Basically, I don't want to use the term absorption because that term gets distorted a lot nowadays in order flow. But what you're seeing is, the sellers coming in here with supply, and they don't always have to show, it's always not going to trade 200. They could probably have 50 at a level, 50, 50, 50, 25, or whatever, different levels spread out. It's not like you're just always going to show everything at once. And you can see the market sold off basically from that 50, this is 59.5, up here is 60, all the way down into the mid 50s. It's another $5 move down. Okay, so that's what it looks like on a move down. On a move up, let's take a look at 10 years, okay? Excuse me. I like 10 years on a 4-range chart, not a minute-based chart. Minute-based charts on 10 years is pretty similar to watching paint dry. Okay, so let's go back. I mean, today we had the inflation numbers come out, but let's take a look at yesterday. Okay, good example. Yesterday. Whoops, where are we here? Okay, so you have this nice move down, right? It's a nice move down, 119.28 here, all the way down to 119.20. Obviously, some numbers come out, but you're seeing the big bids coming in here. 26.92, right? You don't see that sort of size coming in here on the offer side or anything. Even on the bid side, this is what, 25.08. But now that we hit the low, we start coming back in. We have buyers that are coming into this market. 26.92. Market gets bid up some more. Another 1,800 on the bid side here, right? And the market keeps going up. Right, 10 years is obviously a slower moving market than gold or E-minis or NASDAQ. And the volumes are different, okay? But once you understand what decent sized volume is in a market, it should be very easy to see. And, let's pull up E-minis then. I'll go to a 1 minute chart. Again, today the markets have been selling off. It is weird. The White House came out yesterday and started talking about inflation, and then the inflation number came out. Markets started selling off yesterday. Then the number came out, and the markets rallied today. I guess people are expecting a much worse number if the White House was talking about it the day before. I just thought it was very interesting that the White House all of a sudden came out and started talking about it yesterday, right ahead in front of a big number. Because a lot of people are scratching their heads when the number came out today. Like, why is this market rallying? We should be selling off a little. Now we're selling off. But just really quick, let's take a look how it looks, on a rising market. I think last week, we were sort of rallying. What time was it? It was around 9. Yeah, here. Right, we started rallying up here. Okay. Just before 10 o'clock. This is Chicago time. Right, market's just more or less going sideways in here. We're trading around, I don't know, average is around 44, 85, 86. And then, boom, right? You got the aggressive buying coming in here, nice and strong. Okay, you're seeing buying imbalances here, stacked buying imbalance. But look at that size. Okay, 231. Okay, that's probably, to me, that would be sort of on the low end of a heavy delta number. But you look at that, 518. 335. So what do you have going on in this bar, right? As we're sort of breaking out of this 44.88 area, right? The swing high here was like what, 44.89 3/4. Now we start breaking out above 44.90. You got the aggressive buying going on here. You can see the buying imbalances. Boom, a big bid. Boom, a big bid. Now you have support coming into the market. It's holding up that market, right? More aggressive buying. Boom, another big bid coming in here, right? Boom, just lifting all the offers. Right up here, right? You don't see any volume on the bid side here. Then you see 255. So they lift all the offers, turns a bid up here. There's another 579. Here's another 249. There's another 238. So you're seeing big bids coming into the market. How do I know these are big bids without looking at a bid-ask footprint chart? Well, I know it's big bids because it's the delta at the price. So it's telling me when this market was 44.96, there was 255 lots more traded than when it was offered at 44.96. Remember, this is horizontal delta. Okay, so at this price, this price is 96 and a quarter, not 96. It's telling me that there was more interest in buying it when the market was going up than there was in people selling out up here. Okay, but really what you're looking at is support coming into the market, right? And obviously, you know, if you're getting in after this bar here, or even after this bar, I mean, you're getting in around, you know, the 98, 99 area, definitely below 4,500, and it just shot straight up to, you know, the 12. Okay, so, you know, understand that there's more than just the bid-ask footprint chart. I know some people, that's all they look at is a delta footprint chart. They don't use the bid-ask footprint chart. They just focus on the delta footprint chart, and there are things to look for. You know, I have a special course on trading the delta footprint chart, but really what I want you to start to do is look at other ways of using the order flow rather than just, you know, a bid-ask footprint chart. A delta footprint chart gives you great information. So if you enjoyed this video, be sure to hit the like button, right? And that's important. You know, I like to get your feedback that you enjoyed the video. And if you want to see more like this, be sure to click the subscribe button. So when I post them up, you know, again, I'm trying to be a little bit more proactive this year, sort of my New Year's resolution coming in April, that I'm going to try and get more videos out there for everyone to learn more about order flow. So thanks, everyone. Bye-bye.